Good afternoon, good evening, whatever the day finds you. Again, my name is Rachel Mukanya, your finance lady. Don't forget to subscribe down here. Ask a question, leave a comment, give a critique. We are open to everything that you have. We are willing to answer your questions because we research, we recommend, but you decide. That is what From Scratch is all about, financial awareness. So today we'll be talking about a very important topic that throws off many people at times. If you don't know what you are doing or what it is, you're going to be like, okay, maybe you think that you're already doing a good job. Today we'll be talking about assets and liabilities. What are assets? Assets are the things that you have, or the investments that you have that are bringing income into your pocket, or that can be transformed into income. They are depending on their level of liquidity. So what are liabilities? Liabilities are the things that you're owing. On the other hand, that you are supposed to give back or you're supposed to return. At times, some liabilities have interest rates on them, like loans, car notes, mortgages. Those are liabilities with interest rate. I know that somebody is like, what? Car note, mortgage? Yeah. Those are the tricks when it comes to understanding or talking about assets and liabilities. So for example, if I ask you a question now, that is your car or your car note an asset or a liability? Just drop your comment down below. Then as your comment comes up, we are going to understand whether you know that your car note or your mortgage is an asset or a liability. But before we understand what really grabs the concept of assets and liability, we are going to talk about one very most important thing when it comes to assets and liability. It is cash flow. What is cash flow? Cash flow is just the amount of money, liquid cash, that goes into your wallet or out of your wallet. That is the best way that I like to explain assets and liability. Assets and liability can be explained using cash flow, the amount of money that goes out of your wallet and the amount of money that comes into your wallet. Then we are talking about assets and liability. Now we came back to the question of your car note or mortgage. Is this an asset or liability? I hope that somebody is going to give a response there. So let me answer you the question. Your car note is a liability. Your mortgage is a liability. Why? Because they are taking cash flow out from your pocket and you're giving them to maybe the car dealers, or you're giving them to the mortgage company or your bank that was financing your loan for the mortgage. So that is a liability in the meantime, because it is taking cash out from you and going somewhere else. On the other hand, if you're using this car for Uber, for example, you're using the car note for Uber. Your car note is $300 a month, and your insurance is $200 a month because you took a complete coverage. Now you have $500 a month that you're supposed to take out from your wallet and give to these two set of people, the insurance company and the car dealership. So when you're using this car for Uber, at the end of the month, if you come out with an income of, let's say, $1,000 after you've paid for gas or the other little taxes, and you come up with $1,000, you take $500 and pay $300 for car note, $200 for insurance, you are having $500. Then that car becomes an asset to you. Why? Because the car is bringing income, cash flow into your pocket. But anything that takes cash flow out of your pocket is a liability. Anything that brings cash flow into your pocket is an asset. That is the best way to understand assets and liability. The cash flow, how the cash flows. Is it flowing outside? If the cash is flowing out of your pocket, it is a liability. If the cash is flowing into your pocket, it is an asset. So when they ask you anywhere that you are, that what are assets and liabilities, you just say the easiest way to understand your assets and liabilities is to understand where the cash is flowing. If it is flowing out of your pocket, it is a liability because it's removing money from you. You are spending on it. If it is bringing money into your pocket, it is an asset because it's building on what you have. It's growing. That is the best way we can talk about assets and liabilities today. Again, don't forget to subscribe. Your finance lady is always here, ready, willing to answer your questions. Because if you have a mindset of understanding your finances, understanding your cash flows, how they are going, whether they are creating an asset to you or they are being a liability to you, it's going to give you an optimistic mindset to understand that the things that your cash flows, your cash outflows are causing to you, there's a method that you can turn them into cash inflows. That is just the example we're working on today, understanding your assets and liabilities with respect to your cash flow. When it goes out of your pocket, it is a liability. When the cash comes into your pocket, it is an asset. Again, don't forget to subscribe. Your finance lady is always here. Stay blessed.